Wednesday, January 24th, market analysis, Stan Ehrlich. Good morning, 9:50 California time, and about the middle of the trading day from 6:30 to 1 o'clock in California. I start out with the stock market indexes, and this is no exception. We have the March E-mini S&P or ES in overbought condition, rallying very strongly out of a major breakout on Friday of last week, clearing previous resistance areas, and so far not stopping. But because of the overbought condition, it is highly likely that this market is about to have a downside correction very soon, very possibly this week. I would expect it to come back down to about 48.40 on the E-mini March futures contract, and maybe into that trading range that we saw during December and January. Now, there's a chance it could come down to the bottom of the range, which would be between, say, 4,700 and 4,740. But I'm not expecting that. I think it's going to bounce off the high end of the range, 49 or 48.50, 48, 4,800, and turn back up to make new highs for this bull market, which started October 13th of 22 throughout, and that was a bullish engulfing ER buy signal, right smack on the bottom. So I'm obviously bullish, have been for many months, and don't see any end in sight for this bull market at this point. Next chart is going to be the Spider SPY to show you that October 13th bottom in 22. There it is over here in the bottom left, a whopper of a bullish engulfing in oversold conditions, and that is the basis for my ER signals. And that was the end of the previous bear market that lasted about 3/4 of a year and the beginning of this bull move. So no end in sight at the moment, but we do have a gap up situation this morning in the Spider. Now, gaps, three kinds. There's the original breakaway gap to the upside. It starts a move up or down, bullish or bearish. There's what's called a common gap, and that kind of happens anywhere along the line in a trend. And there's exhaustion gaps, which happen typically at the end of a swing in the market. And this looks like about the right place for a potential exhaustion gap. Now, you don't know until you see the market turn around and start to head south to some degree and label it an exhaustion gap. But again, I see these things in advance. It's been over half a century I've been watching them. So this is a setup. Not only are we overbought, but we also have a possible short-term, not really big deal, minor downside correction, maybe exhaustion gap today. Next chart. And I got the 1 minute Spider here, and we opened higher, a couple of 3 points, something like that. Pulled back a little bit, but did not close the gap, did not come back to previous highs, and started to make new highs. And we're right there right now, right up against the high of the day, up 3.7 or so on the Spider, 1.2 on the DIA, and the QQQs are exactly 6 points higher for that moment. Very strong day today. Next chart, DIA, daily data, almost new high ground, lagging behind a little bit behind the Qs in the Spider, and I'll get to the Qs in a moment. Very bullish situation across the board with all the indexes. Next chart, we've got the Russell 2000, not quite the same situation, but we did see new highs several weeks ago, but it got overbought. And those new highs were a new high for, I think it was over a year. So very bullish situation in general. A pullback to basically support different levels, turned around after being oversold and there's a little bit of a breakaway gap there, it looks like. And so far, we're not coming back down to close it. Now, that gap and most gaps are almost always closed. Just yesterday, we rallied enough to close a gap that happened on the way down January 2 to January 3. So that's closed. And that moved down, closed an earlier gap from December 13 to the next day. Gaps are usually closed. That one did not get closed. This one got partially closed. Nevertheless, there's a good chance that on the dip on the other indexes I've been mentioning, we could close this little gap here in the Russell and then turn up. Next, QQQ. Two gaps to consider. One of them is a perfect spot for a breakaway gap, and breakaway gaps are probably the least likely, but still likely to get closed. So I'm looking for a move down to 413.70-ish in the QQQ, and maybe even a little bit lower in the next week or two, and then up into new high ground completely. And we've got the March NASDAQ futures contract NQ, and it is overbought for 4 days in a row. There's two Spider and the Qs that are overbought. NASDAQ not quite, and the DIA is close. But 2 out of 4 of my major indexes are overbought. Watch out. This implies that we're very soon about to have a minor, maybe a little bit more important than that, but minor in general, downside correction. Maybe like the little dip that we had kind of from December 28th through January 5. That would be very similar. Anyway, let's go back to futures markets. So I start out, by the way, if you got questions, you're interested in a particular symbol for me to analyze, just email me at info@ersignals.com. E-mini, from a slightly different perspective, overbought, it's getting ready to turn down. Do not, in my opinion, buy at these levels. Look for potential short-term scalps on the downside or swing trades on the downside, and then a little bit longer term buy on the way up. Next, NASDAQ, same story, same situation. Bonds. Now, if we're going to see a dip in stock market indexes, I would expect to see a dip in these interest rate futures. Now, here we have a high at resistance and overbought conditions on the end of December. So basically all of January at this point has been down in bonds. And as you noticed in the other indexes, that's not the case. So a decline in interest rate futures implies an up move in other stocks or the stock indexes. If and when, and I do believe it's going to soon, the bonds are going to bottom out in this resistance area, just slightly lower maybe, but not much, very soon, and continue to work higher in interest rate futures, which is what I expect. That should help the market continue to work higher overall in the overall indexes, S&Ps, QQQ, etc. Want to point out that we got a buy signal on the exact low day, October 23rd, turn green, bullish engulfing, oversold conditions on my custom relative strength index. Wells Wilder taught me, RSI himself, George Lane taught me stochastic himself. I got taught by Larry Williams and a variety of other people with their indexes in the 70s, 80s, 90s when I was part of the lecture circuit. So, 10-year notes. Pretty much the same story, but looky here. We have a bullish engulfing at the moment buy signal, which is just borderline waffling back and forth. We are now only up about a tick. We do have an outside up day, and we were just barely, it appears, oversold, or not quite actually, a few days ago. So watch interest rates. They just might start to rally. Crude. Daily data. Continuation contract. All these futures are continuations, so I get lots of history. Looks like it's going to break out to the upside. Support held. I'm going to get a rally up to about 80, it looks like. And maybe it'll turn down again, as it has many times now for quite a long while. This 80 area is pretty significant resistance. Next, and the long-term trend was sideways to lower. Now, sideways to lower, long-term trend. A sell signal that I got a few days ago, last week, worked fantastic the next day and the next day. So yesterday we started to pop back up a little bit after a gap. So that's a minor downside exhaustion gap. Closed the gap almost yesterday. Looks like came super close. Now the gap is closed. Done. I don't think we're going to get much of a rally out of this. There's a chance we could get back up to 2.8, maybe a little lower, 2.68, something like that. And definitely resistance at 3.0 should stop any good rally and turn it down completely. Next, heating oil. Short-term bear trend, stair-stepping its way down. Got a few very nice sell signals on the way down. And I got to fix this RSI. So sorry about that. I'm not sure why it's goofing up on me. But I do like this bear trend, and I expect to see the lows of 2.6 challenged and broken very soon. Next, gold. Not quite a bearish engulfing, but close. New low close likely for a few days. New low for about 3 or 4, and challenging the bottom of the support area. I think it's going to get broken. Now, remember, I had been talking about, and it looks like I should continue to talk about it, a head and shoulder top formation. This, and I'll draw in some lines here for those people that like to see the extra stuff. This is the first shoulder high. Okay, highlight and get the new one. Okay, this is the head of the formation, right there with a huge bearish ER sell signal smack dab on top, and a sell signal in here in the top, almost a high. Plus, we've got the last shoulder high, of course, just recently. Now, having detailed the shoulder, head, and shoulder, I already had the neckline plotted, and we broke out on January 17th to the downside. But what should not happen usually is the market coming back up above that neckline, especially on a closing basis, which happened on one particular day completely, January 19, but it started to slip back down. That would be Monday of this week. Tuesday, a little bit higher, but nothing particularly important. And today is clearly at this point below the neckline again, and a new low close for the previous 5 days, and coming pretty close to a new low for the trend down. Now, if we start to close below 2.00, etc., then we're back on track for the head and shoulder top formation working correctly. And my minimum downside objective would be about 1.850, 1,850, period. Next chart. Silver. Well, if gold's going to go down that much, probably silver's going to go down a lot. Silver's back up into a resistance area, not overbought. There's a chance it could rally a little bit more, but I don't have much faith in it. I think I should be looking for sell signals and expecting to see new lows, and maybe soon this major support area broken and get real bearish longer term. Next, platinum. Bounced off support again. Started doing it way back in June of last year, once, basically twice, buy signal right in there. And then a little bit below support, buy signal on the bottom again, sell signal on top. That was great. We didn't get any signal here, but oversold conditions pushed it right back to and through resistance and up to another resistance area. And here we are again, trying to bounce off support. So maybe we'll get a little bit more of a rally out of this, but I have to be relatively neutral maybe a little friendly short term, another week or two, but longer term, bearish. Next, high grade copper. Very strong rally today. Will it stop at the major bear trend line? Watch closely. But that is also just a little bit below some resistance. So there's a chance it could rally above the bear trend line and stop at the resistance and turn back down. We're getting closer and closer to overbought. So a little bit more strength might get overbought at the trend line and or resistance, and perfect, then turn down. Next, soybeans rally nicely. Looking for a resistance at about 12.90 to stop this rally and probably turn back down again. This is an intermediate to longer term bear trend. It just got very, very oversold for a couple of weeks, and then finally turned up. So modestly friendly short term, again, up to maybe about 1278 and 1280, 1290, I meant. Right in there. Turn back down again, probably. Next, soybean oil. Again, slightly friendly, but it's not behaving. Let's see it come back up to resistance again and turn down into new low ground. Basically, I'm bearish. You can't help it. You got a bear trend here. You don't have any major bottom formation. So I'm looking for new lows, but there might be a little bit of a rally first before we see new lows. Bearish. Next, meal. Kind of the same situation. Intermediate trend, fairly neutral, short-term bearish, but the longer-term situation is a very broad double top. We need to close below this support level at 334 in order to break out of the double top formation, and that would be very, very bearish longer term. Almost a little bit unacceptably bearish longer term, but still probably produce a very big down move. So I'm looking for support, test of support, but there looks like a very minor rally could still continue before it goes down to 335. Next, corn. Oversold, starting to rally, fine. Talked about that. Resistance is just a little higher at 456. That is not much, but instead we have a chance to come into 470. And I cannot rule out something in the ballpark of 485 or maybe a little bit higher, but this trend is obviously down. And what I've been saying all along is corn is going to go by the way of wheat, probably, which has done exactly this since the beginning of the war, which shot wheat prices higher at an incredible speed, maximum speed, as a matter of fact. Limit up bid, sometimes locked limit up all day long before we finally got an ER sell signal smack on top of the market to the exact day. Finally, we're down here and sideways. I'm going to go neutral on this for the moment, but probably down. Cattle. Rally continues slightly. Fine. Got a good buy signal back here on 1215. Good. Came close to support and oversold condition. No surprise it turned around. There's the signal. That's nice. So far, what are we going to get? Yeah, I've been talking about 180. So I'm looking for resistance to stop the rally. And we are super close to overbought. Plus, we have been overbought just a couple of days ago. And in fact, at today's high, we were overbought. So we're coming close to turning back down. Now, hogs. Resistance just above, just like cattle. Getting very, very close to overbought, just like cattle. And I am looking for just a little bit more move up, just like cattle. And sure enough, I think Miss Piggy's going to turn down after that and go right back to where it was before at 72, 71, and maybe even come all the way down into the middle 60s. Next, OJ. Well, my previous head and shoulder top that I talked about before it finished forming, even before the last rally high for the shoulder. I started talking about head and shoulders probably around December 8th. We got it. It worked fantastically. Unbelievable. Minimum downside objective forecasted around the time it broke out, it came within $1, a $287 price missed my downside objective just by $1. That's good enough. Oversold, minor double bottom, buy signal at the first low of the two lows. I think it's going to rally a little bit more, probably up into the ballpark of 322 and maybe 340. Turn down to make new lows for the trend again. Next, cocoa. Screaming bull. Very, very overbought. Watch out. This market looks like orange juice did a few months ago. It's getting very close to probably a very important high. We have been at 88 very rarely, looking at the last, last 2 years or so. And every time it got to around these RSI levels, 87, 88, it turned down to some extent or another. This rally is one of the strongest we've seen in the last couple of years. The implication is this is a blow off top. We're looking at the beginning of the end for cocoa. Next, coffee. Maybe a head and shoulder top. I thought so. Yesterday and the day before, I said the timing is about right. The prices are approximately correct. The last shoulder can be above the first shoulder high. Not a problem. And I'll do the little arch mark thing for you real quick here also, so it's become more obvious to a lot of people. This seems to be my first shoulder high. There it is. Let's duplicate that and put one little arch at the top of the market, and there it is. That's the head of the formation, and duplicate that little arch mark. And the last shoulder high is today, I think. We have a bearish engulfing. It almost was overbought, and that's typical of a last shoulder because they don't have that big a rally, and it doesn't get overbought as often. The first shoulder, oh yes, definitely, and the likelihood is substantial that the head of the formation would also get overbought, but not the last one, because the rally is usually a lot smaller. This is a very big move up. That's a very substantial, but that's it. That's all she wrote. Head and shoulder top, last shoulder high today, in my opinion. Fail-safe comment, no closing price above today's high. That's where my possible buy stop would be. This is not any kind of official recommendation. I don't have any licenses anymore. I had a commodity broker's license over 35 years, stockbroker's license for a while, was a hedge fund manager, blah, blah, blah. So now I'm Mr. John Doe. And I'm allowed to say a little bit more flexibly than I was when I had licenses. So bearish engulfing, I like it. I love it. It's great for a last shoulder high. The only thing I'm missing is the overbought condition, which would have generated a red ER sell signal. Okay, I think we're on the right track. Next, sugar into a resistance area. Very strong and also very overbought. In fact, you got to go back almost a year to see higher levels of RSI than we have now. We're about to turn back down in an area of resistance and an overbought condition. I would love to get a bearish engulfing real soon. Then it would be an official ER sell signal. Next, cotton the rag, overbought. Anytime now, I'm expecting it to turn down. Looking for a red bearish engulfing similar to that. Not the same price, though. We'll see what happens. Back to the E-mini. Still strong, still up a little bit more than when I started. 380 now, $1.35 in the DIA, and 618 for the Qs. Everything has gotten just a teeny bit stronger, but watch out, overbought conditions. I don't go long when you're overbought. I'm looking for sell signals. You guys have a great day. Thank you very much.